Welcome to Frank's Academy Hub. I'm Frank, and in this video I'm going to explain the accrual accounting principle. In less than 2 minutes. Accrual accounting principle is an accounting method that requires an accountant to recognize revenue when it is earned and nor received, and to recognize expense when it is incurred and not paid. Basically, for a company which conducts its business on credit basis such as both purchases and sales are made on credit. Accrual accounting method is generally preferred to cash accounting. Okay. Suppose in January a company gets a work order from its client and the method of payment is after certain agreed period of time, that's a credit term maybe after or within 30 days, 60 days, or 90 days from the date a client received an invoice or bill. So in that case a company will recognize revenue at the time it received the work order and not when it actually getting paid. The company will accrue its revenue and matches with all the expenses incurred associated with that revenue earned during that period. When the company expect to invoice its client maybe in February, then reversal entry will be created in the beginning of February to reverse the original amount, revenue accrued, in January so that to have a debit balance in accounts receivable, and when it actually received the payment it will offset accounts receivable account by crediting accounts receivable and debiting bank account. Vice versa is true for accrued expenses. Thanks for watching, please share, like and subscribe. Leave me a comment on which concept you want to be next. Thank you till next time.